Hello guys, welcome back to another exciting episode of Career Wise. So before we start, I would like to thank every one of you for showing a lot of interest. It's really encouraging for us to putting up more such contents like we did before. So in earlier class we talked about billing and invoicing process, billing procedure, rate structure and allocation, and with some real-time example. This class is in continuation of our previous class where we will be talking about posting documents, its life cycle, and how the process to create a document and to post it with some real-time example as well. So watch till the end, and if you have any queries, do comment or send us to our inbox. So let's begin directly up the class then start.
So today's objective is to understand about the posting document and how this posting is happening. So if we understand the utility structure, we can understand we have a generation plant, transmission plant, and distribution unit. And from there, it will transfer to our connection object. Now your big house is a connection object. In connection object, we have a premise. From premise, we have devices, and at the device level, we are capturing the record. And once we capture the record, we can do the billing. So now this is the overall structure if we see from a physical perspective. But logically, how we represent this in SAP ISU, as I mentioned, we have connection object, premise, installation, and we have business master data. And when we do a move in, it will link between business master data and technical master data and creates a contract, right? So this is how we represent the physical unit into our master data for billing and invoicing process. Now, once this master data get created and once we have the contract, then we have the process of invoicing. Now, to create an invoice, we need a MRU, which is we allocated at the installation level, and MRU linked to a scheduling. Now, scheduling is the duration for the periodic billing for which we generate the orders. So first we need to create an order, creation of the order. And once we create the order, the next step is we need to enter the meter reading into that. We enter the meter reading. And if the meter reading is implausible, we can release the meter reading. We can make it plausible. Once it is plausible, the next step is this meter reading result, and this meter reading order converts to billable, means billing order. Then we can generate the bill, and after generation of the bill, we proceed to check whether the bill is outsorted or not. If it is outsorted, we can release the outsorted bill, and then we can proceed with invoicing. Similarly, once we do the invoicing, the next page is we print the document. Now, once we generate the invoice, it also link a posting document. So with the print document or the invoicing document, it linked to a posting document. So last time we saw this is one of the invoicing document or print document. You can see this is the print document 9 all zeros 18, and that linked to a contract which is 101343. And if I click at the posting document, you can see there is a posting document of 9 all zeros 13. That means this invoicing document linked to a posting document. Similarly, if we go to the FPL 9 and if you pass the contract account, you can see there would be a you can see the posting document in the display, which is linking to 900425, which is your business partner, and your contract account 101343, right? So that means this contract account is linked to your posting document. Posting document linked to your business master data, whereas contract is responsible for billing. Now, once this is done, what is the next step? How this posting document will be entered into our system. So that's how the reconciliation key comes into picture when we do a payment. That means when somebody will go to pay something, we need to recognize at which desk who accepted that particular payment. And that's how we introduce a reconciliation key to club all of them under a single identifier. So now the reconciliation is key is there. Now consider one electricity board which has across your state. Okay, and at each block there are multiple desks. Each desk there are maybe 2-3 collectors. Collection means amount collector. So people come there, they pay in cash, and they generate the receipt and give to the customer. So all these desks need to use some reconciliation key to understand at which desk how much money is collected on a particular date. And once we get those information, we put them into a summarized key. Okay, let it be all the blocks comes under a single summarized key. Okay, so similarly, all the district may become under a single summarized key. So based on the business practices, we do that, we collect and summarize them and then transfer to the GL, general ledger. So GL is nothing, it's a book where we enter all these transactions. And once these transactions will enter, we get a reference key. Now here the reference key need to be linked to your posting document number. Okay, now the posting document number is linked to your reconciliation key. Reconciliation key summarize all the information and enter into the GL. Okay, so if we proceed, how this enters is happening at the table level. So I share one of the document where you will get all the tables from different modules. So if you observe at the FICA tables, you can find these are the FICA tables. Now the postal document header, how much total amount is posted, that would you can find in DFKKO, and that link to BP through DFKKOP, and that link to another table which holds the GL head and the number, that is DFKKOPK, right? And invoicing document you can find from ERDK table, right? ERDK linked to the ERCH table, which is your billing table, right? ERCH table is linked to your bill order table, EABL. So those tables are integrated and finally they generate an invoicing document. That invoicing document get posted, and once that get posted, these 3 tables impacted, which are DFKKO, DFKKOP, and DFKKOPK. Now, if these tables are impacted, what are the FICA document we generate, right? So the FICA document mostly generate the document number. When we generate the FICA document, it's linked to a posting date. Posting date we get from the invoices. Document type like periodic document or interim invoice or partially payment. So those document types we can find currency, whether it's INR, pound, euro, or in USD. So all those details and the reconciliation key. These are the header to identify the document. And once these headers are entered, they will ask the particular business partner details. Now, business partner details, what you get? You will get a BP number, the contract account number. Now, BP and contract account number, anyone will be okay because both are linked. And once you apply the contract account number cannot be stand without a company code. So you need a company code and due date and amount. Amount is whatever generated in invoice. So basically, the most important thing is company code. Now, BPCA, how we create, we know. We need to understand how the company code would be set up and how it is impacting. Now, once you get this company code in directly linked to your chart of account, which holds all the general ledger. So you can see general ledger items. We have company code, we have general ledger account, and business area cost center and amount. Now, business area cost center, again, it's a part of FICO, but we need that to establish the general ledger. So that's how the FICA document need these parameters, and these parameters are most important from the perspective of the posting of the document into the general ledger, right? So what exactly it is happening? If the document posting is happening, like there is an invoicing document, some line items would be reflected. Now these line items link to your document, and once we receive that amount, we are offsetting those line items. That means we are suppressing those line items. Let it be there are three line items. One of the line item is your consumption, one is taxes, other stuff is your meter rent, all those stuff are there. Now, somebody paid fully, so all the line items get offsetted, cleared. If somebody pay partially, so one of the line item need to be clear. So those priority need to be done. So now, as we discussed, from the invoice, it is linked to the posting document. Posting document is not a simple step. It has its own life cycle. So the basic objective of a posting document is like we generate one invoice, and that invoice need to be entered into the general ledger. General ledger is nothing, it's a book. Now we need to enter into the general ledger, right? Very simple, but it looks simple, but it's not so simple. There are a lot of processes involved into this based on the different permutation combinations and conditions. Right? Like a general system, a computer, we have input and we have output. The input is your invoicing open items. The output is your cleared items, right? But in between that, what can happen? So let's see. So first thing, it will be a cash payment. Everything will be paid in one go, right? So debit, a direct debit is happen like somebody is linked to any bank and the invoice get generated 50 rupees, automatically 50 rupees deducted from his account and cleared, right? Direct debit. Or you pay cash. You go to the DEX, you pay all the amount. That's a simple stuff. The input line items would be there linked to the payment and they paid and the items would be get cleared. But we need to check within the due date. If it is within the due date, whatever the invoice amount that get cleared. If it is beyond the due date, what we need to add? We need to add late payment surcharge or any taxes or any interest. So that is another parameter. So one is input parameter, we paid, cleared. Very simple if that is within the due date. This is the simplest stuff for invoice and to general ledger. Let it be. The cash payment is like not linked, means they paid more. Okay, so when they pay more. Let it be they have the invoice of 495 rupees, they paid 500 rupees. So in that case, we need to pay back or return 2 rupees. This is a simple example for 2 rupees, but sometime it happened that we may have some money to return to the customer. In that case, we need to check, okay, this is the line item and this cash payment happened, and then how many cleared items are happened. Now, whatever the cleared items that is done, so whatever the rest amount that need to be returned. Okay, so from the cleared amount, it will come to the return segment. Now, this return segment will check what are the source of open items. Is there any source of open items from the due date? Is there any late payment surcharges? Is there any taxes? No. If that is no, so it will go back to the source, that is the invoice. Now, mostly what happened that we never return the extra amount to the customer. We always keep that to clear that into the next cycle. Okay, so you can observe that in your general utility bill payment. If you paid, let it be, there was a bill of 705, you paid 750. So 45 rupees, they will clear into the next cycle. Okay, so that's how they link to the invoice. Okay, but if he insists, no, I need my money back, in that case, we return them back. Okay, and we readjust. Okay, that's another condition where there will be written condition. Now, let's consider the due date. As I mentioned, due date is one of the important stuff. In the due date, if the due date is already gone and he is not paid, it's red now. He is not paid. Then what we can, in the last example as well, I gave one example, which is the amount is more. He didn't pay anything. He didn't pay anything for that invoice. In that case also, what will happen? the total amount, let it be the month, the due date is over, he didn't pay 700 rupees. In that case, also it will go back to the return segment and it will go back to the invoice to readjust into the next cycle with arrears. So that would be again added into the next invoice as a arrear and go to the customer. Okay. So that's negative side and positive side. Similarly, if that person did not pay within the due date and within the dunning time as well, like due date is, let it be the invoice get generated on the 1st of January and the due date is on 15th of January. He didn't pay that. Okay, he didn't pay that. That means within time he didn't pay, it will go to the return segment and return segment sent back to the invoicing to add on into the next cycle. So now I'm trying to explain, let it be he didn't pay. Now that money is returned back and it will go back to the invoicing segment to add on into the next area. But your grace period is over. It was 15 days on the 1st of January. He got the invoice, but he has to pay within 15th of January, but he didn't pay. And that's how it went to the return. But after grace period of 15 days, let it be by 30th of January, a dunning process is executed. Dunning process means that's a process by which we generate the letters and we send to the customer to pay. Now, once the dunning process executed and we identify it is out of the dunning date, then we generate the dunnings. We generate the dunning and we understand he didn't pay within the time limit, he didn't pay within the grace period, so we need to apply a charge on top of that. That means whatever the money, let it be he has to pay 250 rupees, he didn't pay, that went to the next cycle. For the next cycle, go to the invoicing area. Similarly, with on top of that, we apply a dunning charges. Okay, let it be 10%. So 75 rupees plus 750, which is around 825 going to the invoicing area. Okay, and that cycle will go on up to a certain limit. Like there are different dunning levels, and once the final dunning level will arise where we need to cut up the connection and there will not be no contract. In that case, it will be stopped. Okay, and from there onwards, we'll calculate the years. Okay, dunning will apply some charges and that also go to the next process. Now let it be he still didn't pay. He didn't pay. Even we send the letters, we send the warnings, and it covers all the dunning processes, all the dunning steps. Then we calculate the duration, how many durations they covered. If it is more than a year, so we'll apply the interest calculation. Even if based on these policies of the utility companies, what we do, we apply the interest within every quarter. Okay, in India, it is in quarterly right now because the banks are introducing the quarterly interest concept. So every quarter, we apply the interest rate and that interest need to go to again on the top of the charges. That means your previous amount go to the area, your charges going to the areas, then now on top of that, we calculate the interest and send back. Okay, so all this thing is based on the date and the payment. If the date is over and all the dunning duration is over, then we calculate the period and calculate the interest rate. Okay, so still he didn't pay. He didn't pay and the interest, and he requested, sir, I have a very critical situation right now. I can't pay. So I need some duration, next duration. Please give me 2 months or 3 months of time. So that is called deferral. So the payment date or the due date need to be deferred to a certain duration, let it be 2-3 months or let it be 60 days. And then the new due date get generated and linked to the invoicing, which will be published in the next cycle. So that means that is called deferral. Now, even if deferral he didn't pay, within the deferral he didn't pay, he is not able to pay on the deferral date and he requested, I can't pay. So the utility company also provides some services like you can convert it to installments. Installments like he is not able to pay 1,000 rupees in one go, even if on the deferral date. So the company will say, okay, we divide this 1,000 into 10 installments, 100 rupees in each cycle. And then you need to pay on top of your invoicing. Let it be his monthly invoice is around 600 rupees plus the installation, depend on the installation plan, 100 rupees, and it will be 700. So the installation plan need to be introduced there, and that need to link to your invoicing area. Okay. So now installation plan is also offered, and then he started paying. Okay, he started paying and clearing some of the amount. So when he started playing, so what we need to first clear? We need to first clear what are the top on that. Like we first clear the adjustment amount, whatever the calculation, like based on the installation plan, 100 rupees get cleared. Then interest calculation get clear. Then what are the charges? Those needs to be clear. So there will be priority of those stuff which need to be clear first. And those things need to be clear, and one of your items need to be cleared. And once it is get clear, it will move to general ledger. Okay, posting going to happen. Till that, the posting is stopped and it is into open items. Now, once the posting happen, the entry will go to the general ledger. Let it be all the posting happen. Okay. Now you have lot of transactional data. What you need to do? Even if there are a lot of transactional data, there is a concept called archiving. Okay. And these general ledger informations are so vital that we cannot like stop them or delete them. We have to keep them, because somebody after 100 years can also back with a court case or something that something happened long back. I need some information. So what we do archiving of the data. Mostly the transactional data will be live till 7 years. After 7 years, we extract all those information, put into the archiving stuff and keep them, right? So that's how the general ledger information is so vital. If we put it into a single plane, how it behaves, the whole cycle. So the whole cycle starts with invoicing, okay, and that link to your payment, whether cash or direct debit. And if this stuff is cleared, we clear them within the date. If not, then these steps need to be taken up. Return, deferral, dunning, interest calculation, installation plot, and doubtful flag. Now, this doubtful flag is another stuff which reduces the credit worthiness. So in case there is a doubtful flag that whether he will pay or not, in that case, we regularly remind that person to pay. Okay, you have this payment pending, please pay on continuous date. Sometimes it happened that based on the doubtful flag, we generate the SMS, we send to the customer, like your payment date is on 15th of Feb. So you have to pay, or you have to prepare yourself before that, or you have to put the money in your account before that. So that's how the whole process execute.